0.72%. And Nat Gas had me a little worried yesterday. We talked about it being the top percentage mover for the year, and it wasn't yesterday. But back to our regularly scheduled program, Nat Gas down 8.2% for our biggest percentage mover to the downside. And then to the upside, we have the Russell up 1.44%, the NASDAQ up 1.5%, and Platinum up 2.67% for our biggest percentage mover to the upside. We talked a little bit about Platinum last week, and we talked about it kind of being in this consolidation. I think it hurt us because that has been in the top percentage movers for the past 2 days. Really nice trend to the upside in Platinum over the past couple of days, and really in all of the kind of alternative metals. If you look at silver, platinum, copper, not so much gold, right? Gold is moving to the downside, but some of these alternative metals are trending since the year started. So something interesting to kind of watch there. Not sure what's going on, but I don't need to know what's going on, right? The markets are moving, and if I'm looking for opportunity, these are presenting some opportunities right now.
That is a classic cup and handle. I might even call it a ladle.
Here's the cup here.
Yeah, there's your handle. Breaks out of here. It's interesting you said that gold. I think the unwinding of some gold spreads against other metals, because it's been consistent. Now we've seen this gold can't hold a rally, and platinum up with $24. Pretty interesting. Beginning of the year, it was the exact opposite of last year. So it seems to me there's some unwinding of some spreads.
Observation there, Coach. To talk about our big four, we already mentioned the NASDAQ up 1.5% today. That was the quietest 1.5% I think I've seen in a little while. Not gonna lie. The crude starting to move now, 1.23% to the upside. The S&P's up 1.14%, and gold down 0.68% to round out our big four. I am going to go over to an S&P chart here, and I'm on a 30-minute. Here we are on the 30-minute, Coach. I'm going to pull up your moving averages. And let's take a look at what we got here.
Okay.
See the screen, Coach?
It's kind of hazy.
Okay, how about now? That should look better.
Maybe it's my eyes. So anyway, let's start with last night. After the classic VWAP leaving the first half an hour's range and never turned back. Once it got above the 20, I stayed above the 20 moving average. Only gained more steam on the U.S. Open. Quite a move. But, was not easy on a U.S. session. There was some turbulence in the first half an hour. But look at that VWAP. I think it held every time it touched it.
Like you said, during the New York session, we did have Barkin coming out and speaking, and I think we had that ISM number as well at 9 a.m., which kind of gave us this little spike below VWAP, and we'll look at it on a shorter time frame. But this was a move to the upside pretty much all day.
Interesting. We went right to yesterday's high and the day before's high.
Yep. It's a range, right? Big range. The market has not chosen a direction yet. I was actually, Coach, we were talking a little bit before we got on here, was doing a meeting with some of the VIPs early this morning. We started before the market opened, and kind of just watching this this open. We had if we look just at the overnight session before New York came in, we left that range, that Globex opening range, to the upside. VWAP left as well. And then, my thought process here goes, and this is just a little bit of my pre-market planning. This candle, this 30-minute candle here, that was that sell-off yesterday, right? We had a strong sell-off during lunch yesterday where we talked about it. More volume came in during lunch than we normally get. So just looking at this candle, where we opened was right around 50% of that. And two hypotheses, right? Whether we reject at 59.50 and continue to sell off because this is where those sellers came in, or did they, and this is me going with the assumption that they sold to open in these positions, did they already get what they were looking for on this sell-off below 5,900? So now do we see some covering and then new buying above this area here? And that 50% of this sell-off here held, even through that kind of knee-jerk reaction to ISM, Barkin speaking as well. And then, like you said, just a reversal of the initially this sell-off and then back to the highs of the range, rejecting up around that 6,000 area again. If we look at a shorter time frame, that was tough. It was tough to trade, and this has been the case for the past 2 days. That first hour of the market, really no direction. Once we establish that initial balance, that first hour after 9:30 Central, it's a little clearer where the markets were trying to go. Rich Layton just said big wicks on those candles, wide stop losses, and that's what you need, right? If you got long anywhere in this, and I'm going to remove these here, we'll look at the 33-minute opening range for the session. I'm going to attach VWAP there, and 50% of this kind of held. The low of the opening range held. We already saw that this wick down here was right around 50% of that higher time frame candle that we saw. But you need a wide stop loss on this, right? Let me put back on the ATR here. We talked about this yesterday. But a 2 ATR stop, let's say I got in at 50% of this opening range here, 2 ATR stop, 12 points. You're stopped out here. You're stopped out right here if 50% is your trade location. But that's what you need, right? In a market that kind of looks like this, or waiting if you're looking for a trend for that market to pick a direction. So it moved, Coach, but it was a tough one. Coach, you're on mute.
Sorry.
There we go. Now we can hear you.
That's the definition of turbulence. Look at that. I mean, I lost some money in that myself. Had the patience to recover a bit when the VWAP left. But part of this, we talk about risk management. Both buyers and sellers early on probably lost money. We saw Dakota trying to buy it. He had a nice buy. He tried to buy it, and he got, knocked out. And he had the discipline to stop trading. Now
important.
It's easy. You can say it's easy. He should have kept on buying it. There's a term called resulting. I can look at that and say it today. Well, you could have kept on buying it, but he was down 4,000. He said he wasn't going to lose any more after I think the second or third time. And I hope it's a good lesson for traders. If you can get in early and not, and get chopped like that, that was turbulence. And have the discipline to say, okay, I'm done. Now, if he's kept on chasing it, maybe he makes it. Maybe he loses another 4,000. But the reason why he makes the money he makes, he has the discipline to stop when he's not feeling it. He tried, and he was on the right side. So I don't know if you were watching it in the
Was
audience, but it was a great lesson. And what will happen if for newer traders or undisciplined, at one point you say, "Well, I'm just getting back in," and then here's the problem with that. Right away, you're probably going to feel some heat. And there's no confidence in that trade. And when there's no confidence, it leads to other poor decisions. So I have to give him, Dakota traded very well today and they lost money. That happens. Understand that.
just want a quick aside real quick. See Coach Robert in the chat saying what's up to us. Happy 2025 to you as well, Coach Robert. Coach, we were talking a little bit about just how we and this is for our audience, how we continue to improve at the buzzer going forward. Coach Robert is going to be joining us for every Thursday through the month of January. If you guys haven't heard Coach Robert before, he trades a completely different style. He is the man to go to if we're talking about automated strategies, automated trading strategies. He's going to be joining us every Thursday for the month of January as we continue to bring guests on to At the Buzzer. Switch it up, give you a little bit of different content. I know you guys love us. You love Coach Paul and I here, but it's always good to hear a different voice. So I'm looking forward to having Coach Robert on going forward and talking to us a little bit about how some of his automated strategies do throughout the day. I know he's a busy man and he's busy pretty much running the ship at Top Step in the background. But he's still placing some trades on the side. So, Coach Robert, excited to have you on.
Yeah, I'm looking forward to that. No one knows it like Coach Robert. I'm looking forward to Thursdays, and I can learn from him too.
100%.
He's one of the best.
100%. So, shout out to you, Coach Robert. Thank you for doing that, and we will go from there. All right, so yeah, very, very tricky markets here. So this 5965 area, 5965, there was, you guys know I use Quantower, so I'm trying to pull it up here, and I'm going to see if it loads. But there was some selling that came in yesterday, right around that 5965, where if you got long, that was kind of that rejection area, right, where the market needed to make a decision about these prices, and we can see exactly that, right? We rejected. How many times do you knock on the door before you eventually let somebody in? 3, 4 tests. Eventually, the sellers that are here are going to step out of the way, and we get that push higher. But this is what made it so difficult, right? That zone, and we can see it here going back to yesterday, kind of where that sell-off started. Was tough to get through. You need convinced buyers in order to do it, whether that be new buyers stepping in or shorts covering. But really, really tough trade there. And like you said, Dakota got chopped up a little bit, but getting chopped up in this price action, knowing when to step away, I think is extremely important for your account management overall. And of course, his numbers are always going to look a little bit bigger than everybody else's because he's trading a $500,000 account. But you got to know when it's enough. Enough is enough for your account. Anything else on the equities, Coach?
It was interesting. We got to the 200 moving average and held it for the first time in a couple of weeks, I think, or at least a week.
That 30-minute here.
Yep. Looking. Like it's gaining some traction. Now it's still ahead of the slower moving averages. So I think Monday we'll look for a test that after it holds, maybe we can begin to rally again. But quite a move from last night when we look at it. So nothing else to add. The 50-day moving average in the NASDAQ, we held that.
We were talking about this yesterday. We closed below it. And does that close below mean that we are going to see some continuation? We talked about this being a decision-making area yesterday, and the market's decided. Not yet. We're not ready to sell yet. Still have some progress to make to get back to that uptrend. Of course, that 21,500 level, major psych level there, where we're going to need to see some convinced buyers step in to push us back above. But this looks, again, you zoom out far enough, these markets are in an uptrend. These natural pullbacks are going to happen. I think I heard Hogue mention, at least in the S&Ps, we were down 5% from the all-time highs. In the NASDAQ, where we kind of opened today, was about 5.5% from there, and we're seeing buyers step in. So any major levels like that, 5% down, 10% down, 1% down on the day. It's why sometimes when we're having a big sell-off and in the Top Step TV chat, I'll call out a 2% down move. We're not the only ones looking at those major levels, right? The market does as well. 5% down on the NASDAQ, maybe an area where some longer time frame money is coming in and saying, hey, this is a discount. I'm ready to buy it.
Yeah. Let's take a quick look at the weekly.
All right. Go out to the weekly.
It's the second Friday of the week.
Yes, it is. Here's your weekly, coach.
All right. Still very much in an uptrend. Let's see. That's why I said we're coming back. If we get above this week's high early on Monday, I think we could get a healthy rally. Stocks are on sale. Warren Buffett didn't get his money by getting short stocks.
Oh, definitely not. We got a comment here from I Am Legacy. Why don't you guys just trade the algorithm? I know you all know it, and try to act like there's a simple process that makes these new traders hopeful in retail concepts. If there was an algorithm that I could follow and say, hey, make me money every time to 100%, going to be honest, we probably wouldn't be talking. I don't know that I would be here because Coach Paul just mentioned Warren Buffett. I think if there was an algorithm that did that, you would know my name instead of his. Some of the concepts that we share here are, exactly what we trade with every day. Now, if there is a process that you trade by and you believe either an algorithm is running the market or buyers and sellers are running the market, whatever you do, risk management is most important, because even if the algo is running the market, if you don't manage your risk, nothing is 100%. But I don't know of an algo that runs the market. So for me, I am going to trade the processes that I know, how the markets make sense to me, and most importantly for all of us, manage your risk through all of it. Coach, you know of any algos I can use that are 100%?
Yeah, that's called. There was one. It was Madoff. That's all I gotta say.
That one went to jail. All right. Let's go to gold. Let's go to gold here.
Oh.
Here we go. You can hear me now. Looking at gold on a daily chart, still is kind of in this range, deciding what we do here. 50 moving average up at the highs, 26.85. We kind of rejected off of there. Gold trying to decide what it does here. And like we already talked about, some of the other metals are seeing trends while gold sits in this range. And like you alluded to, Coach, there might be some money coming out of gold and going into some of these other metals, which makes sense here, right? Not really choosing a direction. That being said, it still is presenting some pretty good trade opportunities in this range. Going back to last night's open, which is right here. Coach?
Wow. So, nice trade on both sides. Now, where did we break out of VWAP? I want to say that none of these trades are automatic. Someone just said put an algorithm. You have to take some risk. Period. So here last night we had a breakout to the upside. What was it had a nice move. If we pull that chart back to the highs where we don't see, that looks pretty strong. Now this comes in for any of the risk management. Let's go back to the average true range when we started last night in gold.
So a 30-minute chart.
Yeah. So the average true range for the half hour is what, $4?
$4.
All right. So my theory is take two average true ranges of risk.
Stop is way out of the way. Might be expensive, but
Way
that's
out
why we
of the
trade
way.
micros.
But you never know. Anything can happen. So if you trade micros, now with 1/10 of that, it's $80. Maybe you do too. But we're talking risk reward here. You have this great run. It wasn't easy. I mean, it gave you some heat. But okay, what is 1-to-1 if we get $8?
Let's say we got in at the high of this opening range here. $8 from here would be 26.80. 1-to-1's right up here. Kind of right where that rejection happened. It's a nice trade. It's for an overnight trade, especially. The way I like to look at my overnight trades, coach, is kind of setting a buffer for whatever I do in the New York session. And if it's good enough, I might not even trade the New York session. This is a great trade to kind of set the tone for your day, where you might not even have to trade the New York session.
All right. Now, even if you didn't, you say I want 2-to-1. I mean, it looks good.
Right.
Is there something in that structure that changed that's to get out? And I would recommend this. If you get a 1-to-1, you decide you want more. I'm not arguing. I'm just adjust your stop.
Take something off the table.
Take something or trade unchanged. Put your stop back to unchanged. But what happened when we got under VWAP?
I changed for
you get
the
new
day.
information.
Yep.
Maybe it's not a sell, but here, this is risk management. If you went 1-to-1 and you scratched it, accept that. When you went 1-to-1, you decided to accept it, okay. But here's where stubbornness or just trying to make money will get you into deep shit. I'm sorry.
Ooh.
Losses.
It's honesty. Let's go.
All right. Hey, wait a minute here. Oh, it's selling off. Oh, it's just a sell-off. I'll hold on. The market's wrong. Or that was mine. That money was mine. It's like, and now they took it. No, the next time it gets up there, I'm going to get out. And then it turns into a loser on that big down candle where it breaks the opening range. And now and believe me, I've done this. So I'm not here putting, trying to put anyone down. This is a mindset that happens to a lot of traders. And this is where accounts get blown up. Accepting your risk. Even if you just said that, okay, well, I've turned a winner, which could have been a scratch, into a loser. But if you don't accept that risk and you get stubborn,
something.
To tell me is if I've seen this happen so many times. It's like now you get stubborn, and you're just like, okay, well, I'm going to wait for this to go. Two things can happen. You get stopped out. All right, that's what you were willing to risk. If you were willing to risk that, okay. But now, second chances, it rallies and gets back to VWAP, buy it again. Doesn't notice it doesn't close over. And I want to bring that. The price traded above it, but once it settled back under, it never recovered. So what is VWAP? It's actual volume. It's better than price. It's volume weighted average price. And what's happening when it got to VWAP? We're not seeing new buying. That's I can't say that's such valuable information. I mean, right there, start understanding how in VWAP's coming down. So institutions use this. Big trade use this. This is how it started. They use if someone's got a lot to sell in this case. They're not going to sell it all at once. They could have an algorithm that incorporates VWAP that, every half an hour sell 500. Sometimes also known as iceberg orders. This has the footprint of that. Think about it. It just every time, once it went through it, it never got around to it, never got above it. It traded to it. Knowing that, don't get stubborn.
It has to go back up.
Did a reversal. It has to get back up. This happens.
Looking at this chart, I can just hear the trader emotion, right? Where I got long here. Maybe I moved my stop loss and I said, oh, you know what? No, it just needs, I actually should have put it down here. It needs a little bit more room. Just get me back to break even, please. Right. I'm down $800 on this trade. Please just get me back to, if I get back to break even, I'll get out. Then you get back to break even where it gave you a chance to get out. And you're just like, well, if it can get back to break even, it can get to my target at this point. This is a clear signal using market generated information that, yes, the market revisited these prices, but there are no buyers here. If there were, we would have reclaimed VWAP like Coach is talking about. So if we're thinking about that trade management, if you got an opportunity here, this is a winning trade if you can get out for break even here. Maybe your stop was a little bit lower than this swing low. But assessing how good of a job the market is doing and what you expect it to do, we get new information. There's an opportunity to get out of here for a scratch trade, but we got to put our ego aside when this happens and say, hey, you know what? The market doesn't agree with my trade idea. That's okay. I don't have to pay much more to figure that out. And I can get out of here.
Yeah, boy, how many times have we seen something like this?
Every day.
Every day. Well, there you go. Real quick, can you put platinum up?
I'll pull up platinum in a second. Sivan just said, he asked, can we put up a 4-hour chart? And there you go. Look at it on a 4-hour, almost even cleaner price action, right? Really nice rejection up at this area here. Really nice rejection there. But here is platinum, Coach. Oh, that's ES. Here is platinum. Let's go down to time frames that we look at on a 30-minute. There we go. And last night's open is right here. Completely different chart.
And now let's put there was some unwinding of some spreads, in my estimation, but there's some urgency there. It come back and test, settle below it, below VWAP, but look at the big move. There was that. So instead of one of the things that I use VWAP with is to get an idea of what the commercial or the bigger money is doing. But we don't move the market. As Coach said it perfectly, we haven't heard this in a while. Don't swim in front of the shark.
Yep.
Coach, I'm going to hand that one
I'm
right
bringing that
off
back
to
for
you.
2025. We are going to put some shark emojis on the chat. Yeah, don't swim in front of the shark. The market is the shark, right? It is always right. It's never wrong, regardless of how we feel about it. And ideally, where we want to be is swimming behind that shark, right? Because we're the little fish. So if you're swimming in front of the shark, you could be food. And we want to try to avoid that as much as possible. When the market has shown you it's going in a direction, like gold just showed us it was a short, you can swim in front of them, and there's opportunities for counter trend trades. We talk about them all the time. But if I want to be safe, I want to try to identify where that shark is going and swim behind him, ideally. Maybe swim next to him, but don't want to swim in front of it.
Yeah, that would. But also, Tessenix asks, VWAP is more valuable than a moving average. Why? Because it has volume. An average price, just the calculation is price only. Now, when you add volume to it, it has more information. Volume moves a market. Imbalances in volume, that's what the VWAP is. And we saw that in platinum. We saw that in gold. There's an imbalance. It's trending up.
Right.
It has more information just than a moving average. Now, I would suggest look at both. So that's why it's, to me, it's more valuable. And I still use moving averages.
A trader mentioned actually recently the volume weighted moving average, which might be the best of both worlds. I don't have enough data on it to use it in my own trading, but from what I've seen, just real quick, it stays a little closer to the market, which may give more signals. But then also shout out to Richard Harris in the chat that says he doesn't use VWAP. Used to use it, but it kind of got in the way of just trading pure price action. I think with any indicator that you use, you need to be well versed in that indicator, right? And know it's not just, hey, a blind, yes, this indicator is saying to do this, so I'm going to take the trade. You need to know what signal that indicator is giving you. So if I put a VWAP on my chart, if it's angled, I know that we're in a trend. If it's a flat line, I know that the market is range bound, and then that dictates my trades. A lot of times, I think sometimes we put moving averages on the or an indicator on the chart and says, well, what the market's trading at that indicator, that's a signal to take a trade. You need to observe whatever indicator you're using in many different market personality days, right? Range bound days, trending days, reversal days, and see how that indicator might give you a clue on what's happening. But it's not as easy as just saying, hey, yeah, VWAP says this, so I'm going to take my trades. Right? We talked about it a couple times here. If we're in a range bound market, if I'm entering any of my trades near VWAP, I'm literally lighting money on fire. So when you use an indicator, know what it's telling you. And I think it's really important to do. And it takes some time, right? It takes some time learning it, seeing how it helps make decisions. But sometimes VWAP does get in the way, right? I use it as an indicator, but there are definitely times where I take it off the charts and just look at price action as well. Anything else on platinum or any of the metals, Coach? 950 in platinum. Interesting area here, round number. We can see we had a sell-off. What was this? Towards the end of last year. I'm looking at all this kind of sell-off here, so I would just frame this out here. We rejected right around 50% of that sell-off. So again, decision-making area, does the market trade above this, or is this now a rejection for an opportunity for a short back down towards the lows of this imbalance? Anything else
We
on the
will
metals,
find
coach?
out.
Yeah, we will find out.
That's it for me.
That is it. Let's go over to crude oil. We can talk about it again because it's moving. I got a daily chart up here because of these trend lines that we started to talk about. And we closed above the down trend line for the first time since we've established that trend line.
Since I've had hair, not hair, long time.
Yeah, it's been a little while. This trend line goes all the way back to the beginning of April of 2024. We closed above it on the daily, closing at 74.05 in crude oil. Starting to see this daily ATR indicator flatten out a little bit, maybe start to tick upwards. Still under $2 at $1.50 right now, but crude 2 consecutive days above that 1% up. We had 1, 2, 3, 4, 5 days in a row to the upside, and looking like it's building a little bit of momentum. Coach, what are you seeing on the crude oil chart?
We talked about this yesterday. Definitely building momentum. A pennant, a Dorito, call it what you will. If we put the moving average on that, the 200, we're above it and holding.
It's that white line there on the daily.
Yeah. And what was the low today?
200 moving average on the daily. 7260, 7270, we'll call it 7270 low of the day.
So, it's gaining momentum. Now look at how many days in a row. It's 1, 2, 3, 4, 5. So 5 days in a row, upwards. Can it continue? I'm sure it can. I don't know. As long as it stays above the 200 day moving average, I'm looking to buy the dips. But that's the most we've had since what? I mean,
it's been a while,
for a couple months now.
Going back to the last time we tested that trend line in October, 1, 2, 3, 4, 5. We tested it and rejected. We talked about that yesterday. Yeah. Let's see.
So we can do it again. But actually, it was some good trading, technically. So eyes back on there. But here's the big difference here. If you look at the volatility, the average true range compared to the last time it was up at this trend line.
Oh, yeah. Yeah, we're much lower.
So what does that mean? This has potential to become very volatile. If it's going to be very volatile, it's going to move higher. It's the unexpected move for whatever this weekend. Something happens.
Who knows?
And crude just rockets.
Yeah,
I don't know, but I'm playing one side. I'm looking to buy it.
Got a question here from Pistol Pete. Question for you coaches. Everyone promoted level 2 market data. What is wrong with level 1 data for scalping? After all, there are orders and a trader can chase the equity. I use level 2 data. I've used it for the past 10 years in my trading, but I will also be the first person to say that it is not necessary for a trader to have. I use it because all of my trading is based on volume. So knowing what's out there on the order books is really important, but you don't need to have it. You don't need to have it. I know Dakota has started using it in his own trading. Talked to Dakota a year ago. He says he never looked at the DOM. He just traded level to level. So with any tool that you add to your trading, I think add it with the idea that you have a space for it, right? And not just bringing it on just because, hey, somebody else said I should use it. Anytime a trader asks me about level 2, and you can ask some of the traders that have been in the Coach J chat and Discord, they would say, hey, do I need level 2 data? It's like, you know what? Ask me questions about it first. And then if you see the value in it and you want to learn it on your own, then add it. If you don't see the value in the information that I'm giving, then you don't need it. What about you, Coach? Do you think we need level 2 data? Do you use it in your own trading? Is it necessary for traders to have?
I don't use it. Um, it's an extra expense that I don't want to
That part.
spend. I don't use it. I don't use level one. I think I like the output of it using once again VWAP. Buyers and sellers have to meet, and when at the output of that creates direction. Um, but that's me. I and you just said something very. If you're going to use it, don't use it to observe for the first month. Um, it's not a solution to your losses. Uh, Beware of that. But it was me with VWAP. Um, started, when I started working with Coach Jay. I've been around longer than Coach Jay has been alive, but he understands volume better than I did, and I observed it. I looked at volume, just the volume on the bottom. That confused me, but VWAP, after observing it for a good month or 2 months, I found and understanding it, it became a tool for me. So if you're going to add something new, one of the most dangerous things is an assumption it's going to solve all my problems. I still have losses. I have better losses and less losses using VWAP. So
100%, I'll go.
there's a lot of people lose level 2 and it does them well. Whatever it takes. I mean, some people don't even use any charts. Whatever you do, make sure that you understand what you're doing. No matter what it is, none of it works without risk management. So go ahead. Remember, there's an extra expense, and just observe for a good, at least a month, and don't make assumptions.
And just the last point, if you're going to add it, if you realize after a month that it does not help you make trading decisions, don't pay $30 a month for it. It's not worth it. Planche Donkey Steve, how could you identify a real-time interaction with a zone? Would that be long wicks? Yeah, I mean, if you're just looking at the charts, let's go to the ES here. These wicks, if I'm just looking at the charts, and for me, I look at order flow as well, so I'll see the orders here. But if I'm determining this as a zone based on, I looked towards the left, to the left here and see that that's a potential zone. These wicks here, right, if I'm just reading the candles, tell me that sellers tried to push lower than the zone and buyers stepped up. So yeah, candle wicks are a good idea to look at. Same thing here, right? Interpret these wicks. This candle body is just saying indecision, right? Buyers tried to push it up, sellers tried to push it lower, and they pretty much ended in balance. And then just using overall context with that, right? Why do we get a candle that prints this way? What was happening during the day? There was some news coming out later on. If I look at this candle, I'm going to frame out this candle here, this indecision. We had Fed Barkin speaking today, and everyone kind of looked at this today. Andre mentioned it on Top Step TV as a potential market mover when Barkin speaks. Is it a coincidence that Barkin speaks on this 10 a.m. candle here? We come back to this indecision zone and bounce from there. Maybe not. But yeah, if you're just looking at candles and you're looking for how the candle bodies give you information, I think the wicks are a good idea.
I love the first part of that answer a lot, where we went into a zone where we had previous support. And what is that? What does a wick mean? It didn't spend any time there. So if it's not spending time where it's bouncing off, that's value. That's a value zone. So when we come back again, and it looks without seeing that, it looks like it's going to fall through and keep going. And we get more information 1, 2, 3 times, right? It doesn't spend any time there. That's a wick, right? So that's a great example of entering into a zone, rejecting, because it's wow. I'd like to frame that. That's perfect.
Yeah.
Good question.
And then Steve, so Steve says, so what I see as levels, some may call zones. Yeah, it's the same thing. Level, zone.
Yeah.
I think the reason some people call it a zone is because when we think of levels, it's usually one defined price. And unfortunately, unless you got the 100% algo, the markets don't usually respect a defined price. And it's a general area for where we expect some type of price action to happen. Right. So in this zone down here, right, if we go to a shorter time frame, this whole zone, we could call it from 5903 down to 5875, is a decision making area. Right. So and it's a wide zone, right? Sometimes they're going to be smaller than this. Maybe I could cut this in half and go to the lower end of it. But a lot of times when people say level, they think of an exact price. Any other markets we want to talk about? We got about 7 minutes left here, Coach. Good conversation,
Natural
good questions.
gas.
As always, nat gas filled the gap. That's what it did.
There's our friend again. That red line and the white line, and never came back. I happened to be long last night. VWAP broke out of the range. We got under the 200. I got out earlier than that settlement. It never came back. I don't have the intestinal fortitude to get short. And in hindsight, it would have been a great trade. But limiting losses was my first feeling. So there is a classic example. If we go to last night's opening range,
take the moving averages off for a second. There it is.
There's a zone.
It's a zone.
That's a zone. You know, that half an hour is a zone. And I was watching this, you know, I was nervous. You know, they don't call a natural gas market the widowmaker for nothing. But, and I was up late. I didn't hesitate when we broke into those lows out of that range. I didn't wait for it to close. I just got out. But there we go again.
That's a winning trade.
When you cut losses, you're making hay. It's critical. Now here we go again. There's a zone. VWAP, what isn't, when the selling came in, and it was late. It was like 12:30 at night or in the morning. Once again, before Europe starts waking up and they start trading natural gas. But there it is again. The volume comes in, and look at the size of that candle. And that's so
pretty significant. And the volume relative to what happened later on in the day, I know we did have a nat gas number out as well. The volume's always going to be lower during the, you know, Europe Asian sessions, but if we look relative to the volume that happened around it, that's huge. Right, so that's real selling, and that's why it changes the angle of that VWAP so drastically, because for that time frame, that's a ton of selling that just came in there.
Yeah, and think about it. Once it came in, and it wasn't huge, but it's relatively big volume for that time frame.
Yep.
So some sellers, most likely longs, were watching this opening range. I don't I'm just kidding there. But they have to find some buyers. And we've talked about this before, because as an executing broker, I know as soon as I start selling it, I'm offering fives, and everyone in front of me goes 4 offer. I go sell it at 3, everybody goes even bid. I go to sell evens. It's called racing. It's a race. Now I have to move volume. So price doesn't matter. What's the bid? Sold. I got to move 500 and they buy 5. Like, that's what this
Out of my way.
represents. What's the bid? I'm 95 bid. I'll sell you 50. I'll buy 2. It's an imbalance, and that's, as Coach just said, look at what happened to VWAP. That is a footprint. That's the hint. Like, this isn't recovering. I can't say it. Okay, there's a very high probability that's not going to recover. And look what happened. I mean, it just picked up steam from there. Was that a good sell? What? Go ahead.
No, this is a great sell, but I like the fact that we are talking about this market. And neither one of us made money on this today, but you're talking about the context that got you out of a trade. Linus Rain just sent me a message in Discord that says what we were talking about a little bit earlier, why she maybe doesn't agree with the idea that you don't get smarter after the trade goes on. I tend to agree with that, because if the market presents new information that doesn't agree with that initial trade idea, then I better smarten up or I lose money. And I think that's exactly what you did here, Coach, where you said, hey, I'm long. That's where I wanted to be. But if the market doesn't agree with that trade idea, I got 2 choices. I can either get out or take a big loss because I don't want to accept that the market doesn't agree with me. This would have been an amazing short. And if you weren't long, maybe you take it. But being positioned incorrectly is going to happen more times than we like in our trading career. And it's about how you manage that keeps you in the game. But yeah, that was a hell of a sell. You got to sell to close or open. Either way, you think the market's going down.
Yeah, that's a classic example of VWAP. That was an algorithm that was set to sell. All right, that's your competition. You're going to fight it. You can't swim. There's no one here that can swim well upstream, a mountain stream. Good luck. But if you turn around and you float with the stream, life becomes magically easier.
Right.
So, classic example.
Classic example. We got 2 seconds left.
All right, Coach, I'll leave it to you.
We are at the hour. I got nothing else. It is Friday. Thank you, everyone, for joining. Make sure you hit that like button if you haven't done so already. Thank you, everyone here. Vinov, do we trade ICT concepts? I don't. I'm aware of them because of the amount of traders that we work with that use ICT concepts. And I will always say, regardless of how you look at the markets, there's validity in it. And if you can use it to come to a trading conclusion, nothing is going to be 100%. But I do like some of the concepts, and I see a lot of overlap in some of the concepts that I use, but I don't personally use them. But whatever you use, manage your risk. Coach, you got anything before we go?
Have a great second weekend of the week, and enjoy. Be ready for Monday. I think that's when we're really going to rev it up. So have a great weekend.
Have a great weekend, everybody. Coach, thank you as always, and we will talk to you all on Monday. Bye.
All right.